Well, if there's one thing that Democrats and Republicans agree on, it's the need to reform the U.S. tax code and to keep tax revenues here in the U.S. But they just don't agree on how to go about it. Joining us now to talk about the issues, Andrew Friedman. He's founder and principal of the Washington Update, a nonpartisan think tank. Andy, nice to have you with us.
Hi, Susie.
So this is a topic people have been debating for quite a while now. I mean, what do you think the chances are that we get reform in the U.S. tax code?
Well, you stated it right. Democrats and Republicans both say they want tax reform. It's like motherhood and apple pie. But one of the sayings we have here in Washington is tax simplification is complicated stuff. It's hard to get it done. And you have to kind of separate both the individual side and the corporate side and try to analyze each to see what the likelihood is. Well,
actually, I'm glad you brought that up, because when people talk about tax reform, it could mean corporate tax reform, it could mean personal taxes. Where do you see this whole debate playing out? Which category, or all of them?
Sure. Well, if you look at the individual side, you have to understand what you're doing is dropping the tax rates precipitously. And that means you have to recoup the revenue you lost by dropping the tax rates so the government doesn't end up worse off. And so you have to start doing things like curtailing mortgage interest deduction, charitable contribution, tax-exempt interest on bonds. Everything gets put on the table to try to recoup that revenue. And that's very controversial. It's very hard to get agreement on those kind of changes. And so I think individual tax reform that affects you and me is probably too heavy a lift for Congress. Putting inside even all that, you have to decide, are you going to try to bring in additional revenue with individual tax reform? Democrats say yes, Republicans say no. Corporate tax reform is a little more circumscribed. You're only dealing with corporations or businesses, and you're dealing with business deductions, things like accelerated depreciation and LIFO accounting. And everybody agrees you should have revenue-neutral corporate tax reform, not try to bring in more revenue for the government. That might be more doable, and that would stop, as you just pointed out in your last report, these companies moving jobs and moving money overseas to avoid U.S. taxes.
Well, how can that be avoided? I mean, is there a way to keep all of those profits and taxes on those profits here in the U.S. and so that companies don't have these tax gimmicks?
Yeah, I mean, if you want to change the system in the U.S., and now we're just talking about the corporate side, you want to lower the tax rate here so that companies aren't seeking out lower tax rates abroad. And then you have to make it easier for companies to bring back their earnings that are overseas into the U.S. Your report just noted that as long as the money stays, say, in Luxembourg, and the same would be true in France or England, there's no U.S. tax. But when that money's brought back to the U.S., there's a 35% tax. We're the only developed country that imposes the tax on that repatriation. And that's why you see companies moving out.
And real quickly, there's a lot of debate on reducing that corporate tax rate. What should it be? The CEOs that I talked to would like, 20%, 25%. The White House wants it higher than that. Will there be any kind of meeting of the minds on that?
Yeah, I think most people would say 25% to 28% would be a reasonable rate that would keep companies here if we make some of these other changes.
All right, Andy, thank you so much. Andy Friedman with the Washington Update.
It's my pleasure. Thank you.